I just heard a clip on CNBC that you need to listen to. It's titled, "Is the AI Hype Overblown?" Now, whether or not you agree with this, if you're bullish or you're bearish on AI, let's be honest, AI stocks like Nvidia, they're the ones that are really controlling the markets. If AI were to all be hype, fugazi, fake, Nvidia were to miss huge on next earnings, you would see probably a 20% crash in the NASDAQ, maybe a 15% crash in the S&P, just based on AI being a bubble or hype or very much short term. Not saying that's going to happen, but that's just how significant AI is to our markets right now. Now, this clip in particular, there's one thing that was said that I think you need to hear. And if you are bullish on AI, you need to hear this more than the bears. Screw the bears for a second. If you're bullish on the markets, if you're bullish on Nvidia, you need to hear this video, and that's specifically why I'm bringing it to your attention, judging off of the comments on each and every single video that is published here on this channel. I think a lot of you guys are bullish, and I think you need to at least consider this. And we'll discuss it after I run this clip. It's 6 minutes, 48 seconds. And I wanted to make this video tonight, I will say, because we are going to have some big catalysts coming next week. They'll talk about them briefly. I'll give you more clarity and more depth on them. And then even the catalyst coming out tomorrow morning with retail sales and PPI, that also has implications to your AI stocks and to another big catalyst that is coming next week. And that is the Fed. And boy, we could be set up in a less than optimal position for that catalyst. So let's run the clip, and then we'll be back to go over everything you need to know.
We are sort of wondering whether, if there is a breakdown in quality or momentum, both, the chips could be the most vulnerable. And maybe you're seeing some signs of that this week. Week-to-date losses in the semis. Marvell's down 9%, AMD's down 5.5%, and this is outside Nvidia, obviously. Micron's down 4%, Broadcom's down 3.5%. Broadcom, quality momentum, that's been on the list. Christina Partsenevelos is here at Post 9 to help us look at this. Is that how you're thinking about this? Like, if you do have a bigger breakdown, your beat, your space is going to be the place to look, perhaps.
Oh, 100%. And I have so many comments to what you guys have said. But let's start with Broadcom and Marvell. Their earnings were last week. Why we're seeing this, weakness compared to other chip names is because, yes, they have AI momentum with their custom chips, but they're still exposed to the rest of the cyclical chip market. And specifically with Marvell, they guided weaker for this April quarter. So that, dragged on the stock. For Broadcom, they reinstated their full year target. Many were expecting that to go higher. They didn't. Yeah, there was some hype about the custom chips, but that you still need to keep that in mind when you talk about the momentum argument, when many of these chip companies, AMD, for example, are exposed to other facets of the market. And I question the timeline, which was what you both brought up. With Nvidia, yes, they're launching their H200, their new B100, which is a completely new architecture for the GPU. They're talking about inferencing, which is 40% of their data center revenue, so that's going to help drive growth. But then you see a report from The Information just yesterday talking about Google, Microsoft, and Amazon warning that customers are cautious on their AI spending because they need to see that return. So I wonder in 6 months from now, if that return is not there, then those capex budgets get cut, and then that creates a different kind of momentum trade, or maybe less of a momentum.
Well, I think it creates at that point a reversal of the momentum for sure, and you're underscoring the element of why you've had this positive catalyst for all these semiconductors, because Microsoft, Alphabet, Amazon, they're sitting there, they're spending billions of dollars to build out the infrastructure, and they need these semiconductors to do it. And I'll go a little bit further. They need companies like Cadence and Synopsys as well.
But do they need that 2 years, 3 years from now? Constantly spending that amount?
That's a great question. Yeah. And candidly, Christina, I don't know that anyone really knows the answer to that. What's the length of this cycle? I think is the big question right now. And I think for people to come on the network and say, oh, I think it's going to be 6 months, I think it's going to be 3 years, I think they're just guessing.
But it's
I don't think we know.
risk.
The stocks are not trading like,
no, you're right about it.
We've given the benefit of the doubt, so to speak, to almost everything.
Yeah. The stocks are trading as if demand is sustainable forever. And if you just look at the charts, even from price to sales, bless you, for Nvidia, you really see this just uptick. And so you question, there's comparisons with Cisco back in the 90s. Can it keep up this trend? Well, if those big guys don't come through, yes, Nvidia will say, well, every other facet of the market, healthcare, auto, finance, they're all buying. But they're smaller players. They're not going to be spending, buying 200,000 GPUs, like, let's say.
Look at isn't NXP's on the list?
NXPR is one of our holdings as well.
That's been one of those stocks that's been trading near a high. Jim Lebenthal just taking a little bit off the table the other day because it's like my chip exposure has gotten too big. It's making me a little nervous because the space has gone crazy.
Absolutely. And, I look at the performance of the semiconductors. We have 11% exposure, and I question, again, how long can this continue? My personal perspective is there's actually election risk surrounding the semiconductors. And I think there's big election risks surrounding the semiconductors. So that's probably one of my primary concerns from a fundamental aspect.
Well, there's not much concern on Wall Street because Broadcom reiterated a buy its price target $1,560, $1,560 for Broadcom. So, there continues to be all this bullish sentiment around these names. No one is, really willing to give up the ship on these yet.
No, and I think the challenge is that this is the first wave of AI, and people understand that if we go back to the .com bubble, the impact, the longer-term impact that we're still seeing through cloud optimization, for instance, of the internet itself, that is the likelihood that this trend could persist decades from now in terms of what it can do for the larger economy. The easiest way, the easy button for AI right now is chips. And so I think now you really have to take a step back and say, from a fundamental perspective, to Christina's point, what companies are spending on AI that are actually going to be able to monetize that AI? You're going to have to show results a lot sooner than 2025. This is going to be a 2024 story for some of these companies, and I think that's where you could see money come off the table, not necessarily because the AI trend is not sustainable or defensible, but because there's better ways to catch this second wave.
Nvidia is going to remind us early next week exactly what their dominant role is, correct?
I'm going to be there. So it's in San Jose, and it's their big AI event, GTC.
Monday, Tuesday.
This is the first live event in 5 years, and there's so much hype around it that they had to rent out the SAP's stadium. So there's way more people expected. Every hotel is booked. We're expecting comments on, of course, their new chips this year, collaborations with partnerships, how they're going to monetize software. That's a big one for them, right? Because it's the whole ecosystem, and that's going to be the reoccurring revenue. And then inferencing, which was a little bit of a surprise, the second stage of a large language model, that is driving 40% of their data center revenue. But inferencing is at a lower price point, and then you think of their new AI chips, the B100, that's expected to be 30% higher than their H100. So, margins may be improved, but demand may drop. There may be demand shifting towards the custom chips from Amazon, Microsoft, et cetera. So there's a lot of factors at play, but normally, according to UBS, the stock tends to go anywhere between 5 to 6% higher post these events on Monday. This is on a 6-year average.
Yes.
So there's alternatives to Nvidia as an investment manager, but is there true competition when you think about it? It's Nvidia and then everyone else.
In the training process, no. I would say at the moment, no. But then in the inferencing stage, I do believe that there could be a lot more. And this is where maybe the technical side is not, the nerds in the chip world will say otherwise. But you have such specific tasks, and you can save a lot of money when you don't go for that giant expensive chip. So maybe I think that's where they'll lose a lot of the market share going forward. Right, but for now, first mover advantage. Right?
We'll look forward to seeing you out there Monday, Tuesday. Christina Partsinevelos, thanks for being here.
Now, there was a lot of very interesting talk in that 6-minute clip. I think you really needed to hear that, but this part specifically will be very important over the next coming months, okay? And really over the next quarter or two. This can be the deciding factor on how AI goes from here. And I'll go ahead and just replay this part of the clip over again because she's the first one I have heard talk about this, and I've talked about this in a couple different videos now already.
40% of their data center revenue, so that's going to help drive growth. But then you see a report from The Information just yesterday talking about Google, Microsoft, and Amazon warning that customers are cautious on their AI spending because they need to see that return. So I wonder in 6 months from now, if that return is not there, then those capex budgets get cut, and then that creates a different kind of momentum trade, or maybe less of a momentum.
Well, I think it creates at that point a reversal of the momentum for sure. And
that was very important. Now, I think that's important again over the next, quarter or two. But really, the markets like to price these things in ahead of time. If it looks like companies are not getting good returns from their AI investment, companies are going to slow down their AI purchasing of GPUs. Now, some companies, it's a longer term game, like a Tesla, for an example. But other companies, like maybe a Google or an Amazon or a Meta, they need to start seeing some results. Shareholders, they're not going to like all this extra spending without a real path or plan to monetize it. Could this have been part of the reason why Nvidia was down 1.5% today, down 1/3 of 1% in after hours? Potentially, I think this is more of obviously a kind of short-term problem in the grand scope of investing over the next couple of months and couple of quarters, but it could start to affect Nvidia's stock, as the stock is priced, as they said, for kind of forever growth. I also want to remind you there's 56 analysts that cover Nvidia. So long before you ever see capex budgets start to fall or planned reductions in GPU purchases, let's say from Meta, Google, Microsoft, or any other company, one of these 56 analysts are going to pick it up, right? There's very rarely going to be something that catches 56 analysts off guard. Whereas if you look at something else, a different company, let's just do another small cap stock that I own, which is Fubo. Fubo has 9 analysts that cover the stock. Could there be something one of these 9 analysts miss? Of course there could be. Crocs, another stock that I own some of. I don't know how many analysts cover this stock, so I'm interested to see. It's went up a decent amount here recently. Crocs has 15 different analysts. Could there be something that 15 analysts miss? There could be. Probably unlikely in the grand scope of things, but still, once you get to 50 plus analysts that cover a stock, you're not missing something, okay? When something happens, you're going to know about it, and Wall Street's going to know about it pretty instantly. Now, there is a big catalyst coming up for Nvidia. That is the GTC conference. Now, as she said in the clip, UBS has done the math on this, and typically after this semi-annual conference, the stock tends to go up about 5 to 6% after. Now, this GTC conference is expected to have 80,000+ people go to it. So there's definitely a lot of hype behind this, and I think the expectations are pretty high. Would it surprise me to see a general AI or Nvidia sell-off after this conference? Not really, but I do think you need to watch over the next couple of days if you are someone looking to trade this event. I'm sure there's plenty of you guys watching this video that are looking to trade the GTC conference event, which is going to be on Monday and on Tuesday, but the stock's likely to react the most coming on Monday. If the stock sells off, well, today the stock kind of sold off. It was down 3% at one point. It rebounded a lot towards the end of the day, so it wasn't really a terrible day today for Nvidia. But if the stock sells off tomorrow or it sells off Friday, odds are you may actually be able to see a rally on Monday. Then again, you could make the argument that the stock is priced for perfection already. So maybe you get a, buy the rumor, sell the news kind of event anyways on Monday. And I'm sure you guys have heard of that. Buy the rumor, sell the news. Pretty straightforward. Now, we know there's a lot of hype heading into this event because Nvidia stock has done very well, but also they just got a new price target upgrade as well from Bank of America from $925 previously to $1,100. So yeah, I mean, the price targets even reflect the optimism heading into that event. Now, what's actually more interesting about this is the relationship that you could see with Tesla. Now, Tesla specifically has gotten It's liquidity drained as of recently because of Nvidia, because of these AI stocks. Sure, has Tesla's estimates fallen, Tesla not giving guidance on earnings, all of these different smaller little catalysts have had a negative role to play on Tesla stock, that's for sure. But it's been exacerbated by these AI stocks that are doing very well and the FOMO that money managers are facing right now. Like, if you're not in AI stocks, if you're not seeing these Nvidia like returns, SMCI like returns, if you're not allocated there, I mean, you're more than likely going to lose clients, because odds are you're going to underperform the markets at that point. So a lot of market cap was in Tesla, hundreds of billions of dollars, has left and likely went into other areas of the markets like Nvidia and like other semiconductor companies. So to actually get a little bit of a pullback here in AI stocks could be to Tesla's benefit. Now, I think for Tesla stock specifically, there's a bigger potential risk coming here in the near term, and that is going to be the Fed. Now, tomorrow is going to be very important because we're going to get PPI and retail sales coming out tomorrow morning. Those have big implications clearly for the Fed. We are going to get a new Atlanta GDP Fed GDP Now tracker estimate. And the latest estimate that we have for this quarter GDP is about 2.5%, 2.5%. We're going to get another update, as you can see here, coming Thursday, March 14th. So I'll bring you that update. But generally speaking, higher retail sales, higher GDP. Lower retail sales, lower GDP. So that's going to be important for the GDP estimate. Let's assume that retail sales are going to come in line with expectations or slightly higher than expectations. I think that's kind of what the markets are expecting right now, kind of what most people are expecting, I would say. Then that means GDP is probably going to go higher. But even where we currently sit at 2.5% GDP expected for the first quarter, the Fed is in no rush to start cutting rates. Now, if you look at Goldman financial conditions index, Goldman Sachs financial conditions index, you can see that you are sitting, where is it? You're sitting at some of the loosest monetary levels that we have been at for a long time here. I think it's this one. It's somewhere around here. Okay, it's right here. So you were more restrictive back in 2016 than you are today. This is the Global Financial Conditions Index. You were more restrictive in 2019. I mean, that's crazy, right? You're heading back to the lowest levels that you have seen since 2014 or so. That's not very indicative of the Fed being in a rush to lower rates when GDP is this strong. I think the big thing you need to be watching for is the summary of economic projections. We get a new one coming next week with the Fed meeting. The Fed meeting is going to be on Wednesday, on March 20th. The summary of economic projections is a projection of what the Fed thinks, all these other data points are going to be. The Fed funds rate, inflation, GDP, unemployment, all kinds of different things. And they really try to manipulate and set the markets to their expectations. They want the markets aligned as closely with the Fed as possible. And I think what we've experienced as of lately, with CPI coming in hotter than expected, economic activity being good, I think that sets you up in a not so great position heading into the summary of economic projections. And I think at maximum, me personally, you're going to get a projection for the Fed funds rate around 5.2% for 2024. Maybe 5.25%. That would imply 1, maybe 2 rate cuts. But really around 5.2%, you're going to really be implying like 1 rate cut. Okay, and the last summary of economic projections, we were pricing in 3 rate cuts. And I think this is a little bit of a problem, quite a large problem, if we're heading into this event coming next week. It wouldn't surprise me if the markets do sell off on that, and especially if PPI comes in hotter than expected. Markets are going to start to price in maybe some of the risk that we do get a better summary of economic projections than projected. Now, GDP estimates last projection were 1.4%. That was actually down from 1.5% in the September summary of economic projections. Unemployment rate holding steady at about 4.1%. I don't think that's going to change. I do think GDP estimates could go back to about 1.5 to 1.6% personally. PCE is probably going to stay the same, if not go higher a little bit. PCE and core PCE may go back to about 2.5, maybe 2.7%. In that range would not surprise me. And then the big change is probably going to be to the Fed funds rate. And I've heard this said by many other individuals, and it makes sense if you've watched the Fed conferences over the years. The Fed wants to stay independent. The Fed doesn't want to be political. They say it every time. Every time Powell is asked some kind of political question and he says, yeah, that's not our job to, talk about policies or what Congress should be doing. The last thing Powell wants, or the Fed wants, is to be cutting rates right before the election. Kind of, one side's going to say you're helping this side or you're not helping this side. And then that's the last thing they want to see happen, because then it's going to throw into question whether the Fed should be an independent body anymore, or if Congress should just make all the decisions for the Fed. So this is potentially a big problem, because we're expecting the first Fed rate cut in June. If that gets pushed out, July is probably the last time that you could expect to see a rate cut. And that's what a lot of Wall Street is saying. If we don't get a cut by July, we're probably not going to get one at least until after the election, which could be on November 7th. I believe the election's on November 6th. So the day after, we could get a rate cut. That would be the most likely scenario if we don't get a cut in July, because then the only other meeting we have is September. And I don't think the markets are priced for that. Maybe even if the Fed wanted to be extreme, really open up their optionality, they could say, we're not expecting to do anything with the Fed policy this year. Wouldn't that catch everyone by surprise? They're obviously going to say they're data dependent, all of this, but I think the markets are at a real risk there, considering the inflation reports that just came out. Markets are so convinced that the Fed's next move is going to be a cut. I don't think the Fed wants to back themselves into a corner there, where they have to cut rates next, because that's what they said over and over again. I think the Fed wants to really keep optionality. If this recent 2-month spike in inflation is a larger spike, I don't think the Fed wants to box themselves in a corner. And I do think that is a near-term risk for the markets, along with potential AI hype kind of dying down a little bit. We'll see again on Monday if that is a buy the rumor, sell the news event for AI, for Nvidia specifically, and what the data looks like tomorrow with retail sales and PPI. I think that could really be the dagger in the coffin, if you will, for next week's Fed meeting. If PPI comes in hot, I think you're almost guaranteed to get a very hawkish summary of economic projections. If it comes in on the lighter side, then I think it's more of a toss-up still. If retail spending comes in good, retail sales, then I think, good as in like comes in really hot, like there was a lot of spending in the economy. I think that, again, is another factor that could solidify a hawkish summary of economic projections. If it comes in light, could it marginally affect things? Probably. So we'll see what the data comes out tomorrow. I think that's why the markets could move big coming tomorrow morning. We'll see. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade these events with us live in real time, check that link out down below in the description of this video. I also want to remind you that you have Adobe and Ulta Beauty earnings tomorrow in after hours, and especially Adobe could be very important for your AI trade as well. Really the monetization of the AI trade. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.